All right, welcome to the daily market recap for Tuesday, November 18th. In today's video, I'll be going through the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the NASDAQ, we had another gap down today, took out the lows of this correction so far, ended up rallying kind of middle part of the day, almost went green, and then a late day sell-off closed us below the previous lows here and down 1.2%. S&P 500 also with a gap down, closing below a previous support gap and now well below the 50-day moving average. Lots of volume in kind of a doji-ish candle where we closed middle part of the range, very similar to the NASDAQ on elevated volume. So it wouldn't surprise me if we did see kind of a technical bounce in the market at this point. We've definitely seen a lot of damage throughout the market. So some type of bounce here kind of going into NVIDIA's earnings tomorrow wouldn't surprise me too much. Another reason I'm saying that is the growth stocks of the Russell 2000 today were actually positive, up 0.15%, undercut and reclaimed the support gap, and then closed in the upper half of the daily range. Still well below all the moving averages. The 5, the 10, the 20, and the 50 are now all downtrending and all in the downtrending order, which is not good overall for the market. But at some point, you do get a bounce. Whether that bounce leads to a higher low contraction and then follow through to the upside, I not sure. That's what we would want to see, especially out of the Nasdaq or the S&P 500. But at some point, a technical bounce here makes sense. ARKK, just more weakness. We closed below another support gap. Closed down 0.75% today, and similarly in the middle part of that daily range. Switching over so we can take a look at Bitcoin, we did actually see a little bit of a bounce overnight. This really got extended to the downside. Low was 89.1K. And at that point, we've seen a couple waves down. At some point, you're going to get a reversal and a bounce. That's what we got overnight and into the morning session. Now it's trading above that 90K level, right at 93. Ethereum also undercut and reclaim a key level, that $3,000 mark. So do we see a couple day rally into declining 20-day EMAs? That's kind of my guess at this point, but we'll take it day at a time. But with IWO and crypto kind of bouncing and those indexes putting in larger volume, kind of middle of the closing range closes, chances are we get a little bit of a bounce here. That doesn't mean that we want to go all in long. All it means is we don't really want to start new short positions down here with the market already extended to the downside. Switching to the liquid leaders today, only two of them were up on the day. A couple were nearly flat. First one, LITE, awesome move, undercut and reclaim of the high volume close from earnings, the 10-day EMA, and a support gap to close back over the 10, the 5. You can see a little bit of trouble clearing that resistance gap where we saw sellers the past couple days, which isn't very surprising with how the market closed a little bit weaker, but LITE is showing great relative strength as of late. Not as great as Eli Lilly, which right now I would say is the market leader. Tons of accumulation, above average volume, closes over the 5-day moving average this entire run up in an emerging theme, healthcare and healthcare related stocks. Not much more you could ask for a stock in this market. And Eli Lilly really showing that it deserves to be on the leaders list, up another 0.85% today. Apple closed flat today, right on that 20-day EMA, tried to rally up into the resistance gap. Sellers still present. We have evidence of that now. We rejected at that point. And then again, we closed at the 20-day EMA. Starting to see some weakness in here was one of the mega cap stocks with Google that is still holding up okay. Google down a quarter percent, today after undercutting the 5-day, the 10-day, the high volume close from earnings, and nearly the gap up from Monday, but then rallied and closed in the upper third of the daily range. Overall, Google looks awesome. And if we see further downside in the market and it comes back to that 20-day EMA, that's a really good spot where you could try a liquid leader and see if you can't get Google working, or if you can't get like a liquid stock like that working, it's just showing you that the market is too tough to play on the long side right now. First Solar, little oops reversal, recaptured yesterday's low. At one point, recaptured yesterday's close and the 20-day EMA. Rejected right where we've rejected the last 3 days, and then closed back below those levels, down 0.5%. AMD starting to break to the downside. We saw memory stocks and semiconductor. Those are the two themes that kind of led off the bottom of April and have still shown relative strength up until this point. Semiconductors, we're kind of waiting on NVIDIA to report earnings tomorrow after the close. A little surprising that AMD gapped down and then closed down 4.3%. I don't know if that's a precursor. Whoever tells you they know how the market will respond to NVIDIA, I would not really trust that person. But starting to see some weakness in the semis as well. But it was really the memory stocks today that got hit. And this is what happens in a correction. You get your most risky type stocks get hit first in those themes, and then you go all the way down through the mega caps, and then you have a couple groups showing relative strength. But relative strength on the left side of a base or a correction is just the next group to get hit. And that's what we saw with the memory stocks that started to show some relative strength, or sorry, relative weakness. November 11th, first unfilled gap down, multiple uppercut and failures of the resistance gap with MU. Today, another gap down, closed near the low of the day on that 20-day EMA, down 5.6%. WDC, multiple unfilled gap downs now. Yesterday, uppercut and failed that resistance gap, closed right at the 20-day and the support gap. So maybe a little bit of a bounce there as the overall market bounces, but starting to see some cracks there. And then SNDK, which has been probably the market leader, moving from $42 up to $280 since middle August. Just incredible price action. But when do trends change? Only when you get an unfilled gap in the opposite direction. We got that November 12th to the 13th. Yesterday, we rallied, uppercut and failed that resistance gap. Today, follow through. At one point, this was down like 12, 13%, took out the previous lows in this pullback, and then did close back above the support gap and the 10-day moving average. So again, if the market bounces here, it wouldn't be too surprising if SNDK, WDC, MU had just like a bounce right back into that resistance gap area. But it is the next, well, it is the growth theme that got hit most recently. Switching over to the industry ETFs, we'll sort this by price percent change. Couple that I wanted to cover, GDX, gold miners, had that gap down on Friday and now just double inside day, letting the 20-day and the 50-day moving average catch up. Still not something that I want to buy on strength. Don't want to buy anything on strength in this market. But if we could kind of pull back into the support gap here, right around 72.60, maybe that's a spot to try as we build out a higher low in this base. XLE was really the theme of strength today. Oil and gas names just extremely strong. PARR into new highs, DINO. I'm sure I'm missing a couple, but we've been covering this how very subtly this has been showing relative strength with higher low pullback just under the 200-day, higher low pullback right at the 200-day. And now we're starting to surf that like 10-day EMA on a closing basis. So zooming out, 3-ish year base right here in energy. If we see more and more rotation away from mega cap tech into energy, this has got plenty of room to the upside after multi-year base. XLV healthcare ETF, could not ask for anything better from the leading theme in the market right now. 5 days of just trading sideways, letting the 5-day EMA catch up, closing above that every single time. We do have this resistance gap that we keep uppercutting and failing at. And given the market's in a downtrend, it makes sense that there's some liquidation happening at this point. It wouldn't surprise me if this comes down to the 10-day, this 150 spot, and then we start to see buying step in. But this is very obviously an emerging theme along with biotech. Speaking of biotech, XBI, new closing high, only group to do that along with XLV. So biotech, very, very easy trade to hold. We had the undercut and reclaim of the support gap, the 20-day EMA, and the previous low. That's when I bought it on November 7th. Trimmed a little bit so I could take the risk off the trade, and now we're just letting this work. Anything that looks like this in an overall market that's chopping to the downside is something that you don't need to rush to take profits on. If the market's going to hold up at all, this is going to have plenty of room to the upside. Home builders, we still see weakness there. We did gap down and then close relatively well, but just living below the declining 200-day moving average now. Chinese equities got hit again. BIDU actually held up okay after an earnings gap down, but PDD got hit, and I had a lot of hope for this theme because we were breaking out of a 3.5 year base, but taking out October 10th low, maybe it just needs like another base here. But right now, I'm not interested in that theme. Cybersecurity, because Cloudflare NET was down this morning. I'm sure that put some pressure on this group, still below all the key moving averages. The software ETF gap down and close under the 200-day moving average, just another sign of a tough market. And then XLY got hit really hard with Home Depot being down, I think it was like 6%, 7%. But consumer discretionary just continues to fall apart as the average consumer in America is weakening and weakening. And then finally, we have SMH, the semiconductor ETF, gap down under the 50-day moving average on a pickup in volume. We'll need NVIDIA's earnings to save this. Otherwise, we lose semiconductors. It's going to be a lot of pressure on the market on the downside. So speaking of earnings, before the market opens tomorrow, we've got Target, Wix, TGX, Lowe's, GDS, a couple others that I'm familiar with, but really it's aftermarket close, NVIDIA, Palo Alto. Those are really the only two that I care about, and 99% of the weight is on NVIDIA. So the market has not held up well. We're once again all leaning on NVIDIA to give us some strength. We'll see how they do. Going to the long and the short setups, again, we're in a really tough market. So if you don't want to do anything in this market until we can snap back to the moving averages, build a higher low, consolidate, and follow through to the upside, I think that's completely fine. I think there's more ROI in you studying previous market leaders, improving your trading journal, cleaning up your daily and weekend processes than actually trading in this market. So these are some setups that I'm watching. Position sizing, if I take any of them, will not be aggressive. So keep that in mind. MU, we talked about the weakness in the memory stocks. What I would want to see to buy this would be an undercut and reclaim of the gap zone below the 20-day EMA at this 218 spot. Usually the first test of the 20-day moving average is a good risk reward spot for a stock. Given that the group is just starting to break down, I am less confident in that spot, but it's still something that I would be willing to try nice and tight risk, undercut and reclaim of that. Then the stop would be whatever the low of the day is. Rigetti, we talked about some mean reversion trades going into today. I took MSTR, well, MSTU on the long side. I took IONX, IONQ's leveraged ETF to the long side. And it seems like we are getting that kind of bounce back. So RGTI, another kind of mean reversion trade, double inside day today with a nice strong close. What I would look for this is a gap down to start the day, build out some higher lows under the daily view app. And then when you recapture that daily view app, that would be the entry. Stop would be whatever the low of the day is. Keep it nice and tight. CrowdStrike, we covered how weak the cybersecurity stocks were because of Cloudflare. Still, I would be looking for a first test of the 50-day moving average and a nice round number. Undercut and reclaim of the $500 level would be my entry as it came back through the 50-day moving average. Then my stop would be whatever the low of the day is. For now, this is just a breakout retest, and cybersecurity stocks were kind of an emerging theme before the correction started. So maybe it is the first type of tech that can lead us out of the correction. MDB, software name coming into the 50-day moving average. Not one that I'll probably trade, but I have alerts here, an undercut and reclaim of that. Let's see if buyers actually step in at this key level and we can get a technical bounce. AEM, we talked about gold miners, pull back into the support gap here that we bounced at on Friday. 161.50 area would be the spot to enter. Keep the stop at 2 to 3%. CRS has been showing great relative strength, but In this type of market, we don't want to buy anything on strength, only on undercut and reclaims or gap down VWAP recoveries. So that's what I'll be looking for. Shakeout of the previous low on Friday and the 20-day EMA right around this like 311 spot. 312 spot would be buyable, and then keep a 3% stop. Guardian Health, this has been a stock that's been on my radar for well, basically since the gap up on October 30th, so all month. Just going sideways. This did have a secondary offering from November 4th to the 5th, and we've soaked up that offering, closed above the high volume close from earnings that entire time. It's in the right group, healthcare and healthcare related stocks. Still don't want to buy it on strength. Pull back into that HVC, the high volume close would be buyable with a stop at the 20-day EMA. Next to our solar stocks, NXT, the first one. We've had our first pullback. This is an IPO stock as well. So really nice move off the lows from 33 up to 108. First test of the 50-day moving average, we bounced there. So another kind of pullback into the 50-day. Even if we like overshot it, what I would want to see is a bounce at the support gap, recapture the 50-day moving average. That would be the entry. Stop versus November 14th low. The solar stack that I'm most interested in, though, and really the only setup that I would be looking to take like more than a 5% position on, is the CSIQ, because this is enormous, enormous volume coming in on this breakout from $15 up to $33. Now, it did that in a market that was getting pulled to the downside. So not only is this incredible not only is this an incredible move, but it's also incredible relative strength. We gapped down on earnings, recovered that well, and then eventually just had 2 weak days while the market pulled back. And in a market correction, institutions are going to look for stocks that are holding up and themes that are holding up for liquidity. So it makes complete sense that after a move like this, there's a more aggressive pullback. That's why we don't want to buy anything on strength in this market. We only want to buy on undercut and reclaims. And after a 100% move, your first test of the 20-day moving average in support gap and a key round number of $25, that's the spot that I'll be looking for. Undercut and reclaim that $25 spot. That's the buy. Stop would be whatever the low of the day is. And this is the one that I would be comfortable with sizing up a little bit more, 10 to 15% size. GMED, another healthcare related stock that we've talked about, up 35%, 36% on earnings, then just sideways action, volume tightening up. A little break over today's high, recapture of the HVC would be buyable, stop under yesterday's low, or even better, a little shakeout of the lows the past 2 days, reclaim that area. Then you can manage your risk against November 14th low. Next up, we have BTU. It's in the oil and gas theme, which is leading right now. Big move from 25 up to 36, pulled back to the 50-day moving average, bounced there. And now what I would look for is an undercut of that 50 of the gap zone right at 27.40. Reclaim the gap zone low as the entry. Stop 2 or 3% on that. But I really like how this is shaping up, and it's in the right theme, right against a key 50-day moving average. So it's not an extended stock. And still fast enough mover, 5.4% ADR there. HCC, another metal and mining name. This is a coal stock. Big move up on earnings, 23%. We're not chasing anything. Pull back into the 10-day moving average, inside candle today. If you were to buy anything on strength, I think like this or a healthcare name could work. Still would rather an undercut and reclaim of yesterday's low be the entry right around 76, 78. But if you had to buy anything on strength, okay, we could do that. Keep the stop under today's low. DK, another oil and gas name, just looking for a pullback in the 20-day moving average in the support gap, right at 38.87. And then NEO, this was probably buyable today. It's such a thin name that it's a great looking chart. It's got the volume, like big volume accumulation, low volume pullback. It's in the right theme, healthcare provider. It's doing everything right, except it's a thinner traded name, only $31 million traded a day. So if they needed liquidity, they could spike this down pretty quickly. Today, the undercut and reclaim of the 20-day moving average and yesterday's low, reclaim of that $10 spot was probably the buy point. A little pullback into 10 would be buyable versus like the previous low, November 14th. And if you had to buy something on strength through today's high, sure, stop at $10. That won't be me, but if you had to, that's the type of setup in the right theme after a shakeout day where the market already got extended to the downside, where it could work. And then on the short side, we're already extended to the downside. Anyone starting to short stocks at this point is chasing the move down, unless you're shorting a theme that's just starting to roll over, like the memory stocks. And still, I think that the time to do that was yesterday on the uppercut and failures of all the resistance gaps, maybe today on the opening range break. At this point, I'm just trying to get ready for the stocks that bounce back, that I can short after a snapback rally. Palantir, I am still short this name, but will look to add to my position. Huge move off the lows, $6 up to $208. Price to perfection because it was had an awesome earnings report and gap down on that. This kind of kicked off the correction a little bit, because the first time you had good news getting sold off into. And from there, we rallied back up, put in a couple more unfilled gap downs. Today, we closed out a support gap from September 17th to the 18th gap up, and just really weak close compared to the indexes. Like didn't didn't ever bounce in a meaningful way. Didn't get to the 5-day moving average. So just a lot of weakness here overall. Still don't want to chase this down with the market extended down. Let this rally back up to at least the 10-day moving average, this one like 180 spot. The closer that we can get to uppercutting the 50-day moving average and the 20-day moving average, the better. Then you can keep your stop above the gap down, the high of the gap down at 185. Spotify, another late stage base that seems to be getting a little bit heavy. Again, bounced out of support gap, so we're not chasing a short down here. It rallied back up into the 200-day moving average. Now it does seem to be finding support. Still don't want to chase it lower. Let it rally back up into this area, this 655, and then let it start to roll back over, lose the daily VWAP. That would be the trigger to short, and then your stop would be above November 13th's high. QBT, one of the quantum names that the weakest of the quantum names, never made a move into new highs while RGTI was up like 200%. IONQ was up over 100% from its previous highs. First to get back to its base in September, first to lose the 200-day moving average, and then really extended the downside. But this is a perfect example. You don't want to short in the hole after a big move down, especially going into a binary event like earnings, because they actually had positive earnings and they surprised on their reported sales. So had a nice gap up yesterday, followed through to the upside today, came into the 200-day moving average, and then kind of got rejected there. I still want to give this more room to shake people out at that 200-day. So anyone who shorted late in this move, instead of picking this as like the first one to short as the quantum names broke down, with the market extended to the downside, probably does get stopped out. So I have alerts at the 200-day moving average, but the higher that we can uppercut that, come into the 20-day EMA, or even this gap zone at 1420, I think I would be more comfortable uppercut and fail at that level, just because with that type of price action, you stop out all of the late shorts, and then that clears the deck for another move lower. Then finally, we have Costco, and finally, Costco has broken into its stage 4 downtrend. This is a name that we've talked about for weeks and weeks and weeks prepping. You have your stage 2 uptrend, your stage 3 top, and now your stage 4 decline. We've had lower highs the entire way down into that 50-day moving average. That was a really nice spot to get short, or the previous test of the 50-day moving average. Now that we've broken below these lows where we found support at that 900 to 915 level, like 15 times, now that we've broken that, my guess is that will serve as overhead resistance now. So support turned resistance. Let it rally back up into that 915 area. Don't chase price down. Into that 910-ish area would be shortable. Stop above the 20-day EMA. So that's going to be the daily market recap for Tuesday, November 18th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up to the Market Pulse Discord using the link in the comment section. Good luck to everyone with NVIDIA's earnings tomorrow, and we will see you in tomorrow's recap. Take care.